Ethereum just gained 26% in 7 days. Bitcoin gained around 15%. For most of 2026, ETH lost against Bitcoin every single week. And then suddenly, this week, it flipped. So, what actually changed? That's what this video is about. This is not financial advice. Do your own research and never risk more than you can afford to lose. First, some context. ETH peaked near $5,000 in August 2025, then it fell. By June 2026, it was sitting around 1,500, a 60% drawdown from the top. Bitcoin over the same period, down about 48%. So, ETH fell further, recovered less, and underperformed basically every single quarter this year. There's a reason for that. And understanding it is key to understanding what's happening right now. The structural problem with ETH all year was simple. Bitcoin ETFs pulled in billions. Ethereum ETFs, the largest one, BlackRock's ETHA, sits at roughly 6 to 7 billion in assets. Bitcoin's equivalent has over 54 billion. That gap created constant selling pressure on ETH. While BTC had institutional demand behind it, ETH didn't. Every time ETH tried to bounce, capital rotated back into Bitcoin. The ETH/BTC ratio kept falling. That's why ETH underperformed. Not because the technology got worse, not because nobody cares about Ethereum, just because the money wasn't flowing there until 3 days ago. Here's what happened, August 19th. The U.S. Treasury doubled its long-term bond buyback operations, from $2 billion to at least $4 billion per operation. That sent a signal to the entire market. Liquidity is coming back. Bitcoin reacted first, broke above the descending trend line, shot from 65,000 towards 78,000. But ETH reacted faster. Why? First, spot Ethereum ETFs pulled in $189 million on August 19th alone. That's one of the largest single-day inflows all year. Second, the short squeeze. A massive amount of leveraged traders had been shorting ETH all summer. When the move started, those positions got wiped out. $1.9 billion in short liquidations in 24 hours. That liquidation cascade pushed ETH from below 1950 all the way to above 2300, a 20% move in a single day. And this time, ETH outperformed Bitcoin, not just moved with it, actually outperformed. That's a big deal. Here's why the Ethereum/Bitcoin ratio matters. For most of 2026, this ratio was grinding lower. Even on green days, capital was quietly leaving ETH. When the ratio finally turns up, it means money is actively choosing ETH over Bitcoin. That's what happened this week. Michael van de Poelp, a well-known crypto analyst, called this move and said the ratio sweeping towards 0.033 sets up a very interesting retrace and buy scenario. I wouldn't call it confirmed yet. 1 week doesn't reverse a year of underperformance, but it's the first real sign that something has shifted. Now, let's look at the chart. This white trend line, coming down from the October 2025 high, has been the ceiling on ETH for almost a year. Every time price approached it, sellers showed up. Every rally failed right at this line. Then this week happened. Price was sitting around 1900. The bond buyback news hit. The short squeeze started, and ETH broke clean through that trend line. Not a fake breakout. The volume confirmed it. Right now, ETH is sitting at 2447. The question is whether it holds. The 200-day moving average, which acted as major resistance, was around $2,000. ETH cleared it and is now above it. That's a structural shift. Key levels to watch. 2002.50 is the first support. This was resistance. Now it should act as a floor. 2,400 is where we are now. Price is consolidating right at this level. If ETH holds above 2250, 2650 becomes the next target. Above that, 3000 is back in the conversation. One more thing worth mentioning. Arthur Hayes, BitMEX co-founder, has been buying ETH all month. Since July 15th, he's bought over 7,000 coins worth roughly $14 million. He's currently slightly underwater on that position. Tom Lee's firm, BitMine, bought 7,500 ETH worth nearly $15 million. A separate wallet pulled 10,000 ETH off Bybit, worth almost $19 million. These aren't retail traders. When this kind of money moves, it's worth paying attention to. Two scenarios. ETH holds above 2250. ETF inflows continue, especially if Bitcoin keeps climbing. The Clarity Act vote on September 15th goes in crypto's favor. ETH/BTC ratio continues rising. In that case, 2650 is next. 3000 becomes realistic by year-end. Bear case. This was a squeeze rally, not a trend reversal. ETH loses 2250 support, falls back below the 200-day moving average around 2000. The short squeeze is over and buyers don't step in. That would bring 1900 back into view, and the whole breakout becomes a false signal. There's one problem with getting too excited here. The structural issue hasn't fully disappeared. Ethereum's supply keeps growing slowly. ETF inflows need to sustain, not just spike once. And if Bitcoin pulls back, ETH will feel it faster. 1 week of outperformance after a year of underperformance doesn't mean the relationship has permanently changed, but the conditions for it to change are the best they've been all year. So, where could ETH go? Short term, I'd watch 650 first. If that clears, 3000 becomes the conversation. Medium term, by end of 2026, if institutional inflows stay consistent and the Clarity Act passes, 3000 to 3500 is the range. The more aggressive calls, Hayes has talked about 10 to 20,000 by the end of this cycle. I'm not putting that in a price target, but it tells you how some institutional minds are thinking about ETH long term. ETH spent most of 2026 underperforming. This week, it didn't. The question now is whether that's the start of something, or just a squeeze. The level to watch is 2250. Holds there. The setup stays interesting. Loses it, wait for a better entry. So, would I chase ETH at 2450? Personally, I'd want to see a clean hold above that support first. Chasing a 20% candle without confirmation is how you get stuck buying the top. What do you think, though? Is this finally ETH's moment, or just another false start? Drop it in the comments. If you don't want to miss videos like this, you can subscribe to the channel and turn on notifications. Not financial advice. Do your own research. Never risk more than you can afford to lose. See you next one.